I want to kind of talk about raising money, but like and how you guys do that. But before we do that, like how do you guys structure your down payments and loans? I know obviously traditional home is 10-20% down, 30-year standard mortgage. What do you guys recommend for commercial? What's it like three? Isn't it 3% down? I haven't done too much research on commercial.
Do it.
We've done various deals as far as like equity down. A lot of our I think our first three or four deals were in terms of commercial anyways were 15% down. So we did a lot of shopping around lenders, local lenders, national lenders, and we were able to find someone that had favorable terms, a 25-year amortization, which is for a local credit union that's pretty good on a 10-year loan, 15% down. And the interest rate was slightly higher than what we saw at other lenders. It was right about 5% at the time. And of course, this is a couple years ago, but um, so that those were pretty favorable. But some lenders are more difficult to work with than others. Some lenders require 30% down, and 15%. On the same deal, you can do that deal twice versus putting 30% down. And as long as the cash flow, supports the deal at 15% down, we felt pretty safe.
Right.
We look at the debt service coverage ratio to make sure that, and that all that is the net operating income against the debt service. So we felt pretty good about that. But we have since transitioned to some other lenders where we put, roughly 20% down. And then we've done some owner financing as well. So we've negotiated that. And then, we've done some private lending or some private notes just within our network, as Joe mentioned. So we'll reach out to our, if we don't have the cash available, if it's tied up in another deal, we have enough units right now that we can support those private notes and essentially 100% finance a deal. Again, assuming that the cash flow from the deal supports it, and we'll come no money out of pocket. I mean, we might have to front a little bit for the appraisal and stuff, but then we'll get that private note in, pay them interest only typically, and then get the other 80% from the bank.
So, would you say? Can I ask? Was it Northern Credit Union that the one that you said was preferred?
That was the first one that we
Yeah,
started working with. That was 15% down.
they have great
Um,
like FBA, like first time home buyers. They do like a 0% down for first time home buyers as opposed to other local banks. Do you find that's kind of a trend to maybe leverage more credit unions, or does it vary a lot? Do you use the same credit union? Um, I guess, or was that just kind of by coincidence that that credit union had a better deal than more local banks did?
Yeah, it's been mostly credit unions that we've worked with on the commercial side. On the the downside of that is we have personally guaranteed all of our loans. So
Mm-hmm.
when you get in the commercial world, you can get agency loans with Fannie Mae or Freddie Mac, or there's some other lenders where you don't have any. Trying to think of the word. Uh,
Recourse.
yes, it's non-recourse. Sorry, that so they can't come after your personal assets. If we default on the loan, they can't come and take our house. So we have obviously protection through an LLC, but that doesn't protect you from default on your
And that's
loans.
per property, right? You have a different LLC per property, not like one under all properties.
We do not.
No.
No, we do not. There's puts and takes to doing that as far as benefits go, but in terms of tax reporting and just overall maintenance of the business, we haven't done that. We cover ourselves with umbrella policies and extra insurance versus going out and creating a new LLC for each property, especially when you're buying, anywhere from four to, I mean, I think we've got like 8 or 9 properties right now. So trying to maintain those and then offload them to, as you offload properties and unload new ones, it can be a little bit more difficult. So
Huh, interesting. That's cool hearing the other side of that. I went to a conference in Miami last year, and we had a tax guy come on and say how it was important to have each property under a different LLC, and I took his word for it, and I mean that's what I have, but maybe that's not the best idea. Um,
it,
but
it's good, and I think that a lot of people suggest that. But there's other ways to protect yourself, and not saying that, hey, add all the layers you can,
Mm-hmm.
but for the extra hoops that we had to jump through to get that protection, we already felt like we had enough through the insurance coverage and other structures.
That's actually really cool. I'd love to pick your guys' brain more on that later. Um, so I guess we got time for a few more questions here. I'm I'm a complete beginner in commercial. I've never purchased a single commercial bit of real estate. Um, if you guys were just starting again, right, and you just met on what's that website again?
Biggerpockets.com.
Not MySpace, the Bigger Pockets. Okay, so on Bigger Pockets, like, what in with the knowledge you have now, what would you maybe have done differently? You talk about speed and scaling. Like, what could you have done in the beginning to help, I guess, have more units than you do now, or like exponentially increase the rate of picking up units? Do you have anything that comes to mind?
I think one thing would probably be we'd probably try to go direct to the seller and do more owner financing right
Mm-hmm.
off the bat. I think once you do that a few times, it it's kind of contagious. It's a great way
Yeah,
to get properties
it
and get
is.
them under contract and accelerate. I think in the beginning, we thought, hey, we got to use our own money. We got to prove this out, which is partially true as well, right? You don't want to go and raise capital once you haven't proven that you're able to do what you say you could do, right?
Mm-hmm.
So I think just the evolution of becoming any type of investor, you want to prove out the model, make sure it works, just so that from an integrity standpoint, you can accept other people's capital as it comes to you and be able to be a good steward of that. So
Mm-hmm.
um, yeah, I think naturally, I don't know how much I would change just because we needed to kind of go through
Right.
even small properties to the bigger properties just from a learning curve space.
Right.
There's only so much. We read all the books. I mean, you read all the sorts of stuff and you listen to the podcasts and all that, but
Mm-hmm.
a lot of it just comes from experience. I mean, we still make mistakes. We were talking about the other day. We probably read in a book 2 years ago that we should do an energy assessment on our properties and get free incentives from energy companies. But it's like one of the million things you read in a book, and then it goes to the back of your head, and you get so involved in the day-to-day operation of your properties, you forget about it. And then I was at a conference last week for multifamily, and they mentioned it. The tax guy mentioned it. I was like, dang it, yes, we need to do that. And then I called, National Grid, and sure enough, they have a program available for multifamily apartments, and it's gonna give us a bunch of cool free stuff. So, um, yeah, it's you make mistakes, and you learn from them, and you keep going.
Yeah, cool. That's one thing to kind of piggyback off of what you said. You mentioned you wish you did more owner financing. Um, Now, when you structure those, do you guys ever, talk about maybe having a balloon payment ever after an X amount of years? Do you guys usually owner finance for 20 years? How do you guys structure like your your owner financing deals, or how do you find most of them end up?
Yeah, it's usually balloon payment. So I think we've got two owner finance deals right now. Both have a balloon payment. We Since we go in with the expectation that we're going to add value and we're going to refinance it and pull some equity out at some point, we go in with that expectation. So typically we'll set that balloon period for longer than we anticipate. So if we figure the business plan calls for 2 years or 3 years, then we might set the balloon payment for 5 or 7.
Okay.
I think we've got one on a complete renovation right now on a 12 unit. I believe that's 3 years, but we expect to be fully finished within 12 in terms of going in and rehabbing it, and then there's a few months of financing on the refi, so we should be well ahead of that.
Cool. And so when you pull these loans to, um, I guess, do the balloon, right? You guys would probably pull a loan, I'd assume, to do the balloon payment to pay off the
Hmm.
investor. I mean, because you guys add so much equity to your properties, have you ever ran into problems with said banks? Like, hey, we're not going to give you that loan. Um, Like, have you ever had that problem? I probably not, because I mean, just speaking from personal experience, you guys add a decent amount of equity to every single unit in your place.
No, I mean, so we haven't been in. So we've only been to in business together for about 3 years. So we haven't ran into that. But we underwrite everything very conservatively.
Mm-hmm.
So when we go to underwrite, we don't necessarily underwrite the refinance and the business plan to make sure everything checks out in terms of returns. But we do add plenty of cushion to refinance. So even if we can only refinance for the equity that we have in it and we can't pull anything out, there that's we might be refinancing at 50% of the LTV or loan to value. So at that point, if we're not pulling any equity out.
Okay, cool. There was a part I wanted to ask you about that question. Now I forgot. Shoot. Well, I'll think of it. I guess in the next few minutes, talk about maybe your plans to exit. Do you guys plan on holding for several years? Have you guys talked about maybe in 5 to 10 years when the market gets hot again, maybe exiting on some of these properties? I don't know. You guys talk about like the growth and scaling of the business as a real estate investor, and you talk about in a few years down the road, start building. Do you guys think you'll end up selling some of these properties and exiting, or would you more or less hold them as more of like a life insurance for your families, or what's your guys' kind of long-term goal?
I think originally, I mean, we buy it to hold it, for as long as it makes sense, right? And um, because we're not, I guess, using other people's capital that they're waiting on their money back in full within 5 years. I mean, our personal portfolio and the debt investors that we have, it's more on us. So we're planning to hold long term, but like we talked about before, focusing on return on equity is really important. So as we build equity in a property, make sure it's being put to its best and highest use, right? It's if we got 100 grand in equity sitting in a property and we're not accessing that to grow it, then that's an opportunity for us either to sell or find another way to access that, refinance it, pull that equity out, and then go deploy the capital somewhere else. So it's I would say it's always changing, right? Because we sold a duplex last year, potentially selling some more units soon, but it's all about just making sure we got the right return on equity.
Mm-hmm. Okay.
Yeah, I would agree with that. We're always analyzing our portfolio. We do, like Joe said, we buy with intention to hold that property forever, but then we're constantly analyzing it to see if it makes sense within our current portfolio. And then also given everything else that we have going on in our lives, like if we have a problem property or if it's just not enough units, so we sold a duplex last year. That was our smallest. The ones that we're looking at potentially offloading now are 4 units, and those we've got, I think, 4 units, which are our smallest properties. So we will, still plan to scale up to larger units, and as we go after 20, 30, 40 unit properties, a 5 or 6 units not going to be as meaningful to us, but the time and energy it takes to acquire that is the same as it is to acquire a 40 or 50 unit. So that we will look to again offload or access some of that equity so that we can go after some larger ones, which creates opportunity as we network with other investors and people who are just starting, gives them opportunity to get into some larger properties for themselves. But
So I guess if I were to be a investor, can first of all, can anyone invest in True Freedom Capital? And if so, what is like the minimum amount to be able to invest?
Yeah, so part of our mission is to help as many people as possible invest in these types of assets, right? So even on our page, there's kind of 2 different ways you can raise capital. I mean, there's a lot of different ways, but I'll talk about 2. But one is 506B and a 506C syndicate. So essentially, it's a group investment syndication. and it's deal based. So say we have like a 40 unit apartment complex and we need to go raise capital for the down payment, for the renovation costs, for the acquisition costs, legal fees, etc. Right? You raise the capital. There's two types, right? So 506B is you can accept up to 35 non-accredited investors into that syndicate. And so that would be people who make less than $200,000 a year and do not have a net worth of over $1 million jointly with their spouse. So accredited investors, and those rules are constantly up for debate and change with the SEC and those regulations. But accredited investors really can invest in all sorts of different types of assets, right? It's a nice thing to be an accredited investor because you do have a lot of different options of investments out there. But and if you are that you only want to work with accredited investors, which isn't us, you would do what's called a 501c syndication, and then you can advertise it. Like if we had a deal right now, I could be on this podcast and say, hey, we have this 40 unit, guys, come invest with us. And I could tell you all about the deal and whatnot, and you could click on a link and invest in it, right? But with a 506B, you can't advertise. So you have to have a relationship already with the person, right? So I would have to have a phone call with you and explain, you'd have to talk to me about your investing goals. Hey, what do you plan on doing? How much experience do you have? What are you interested in? Have that relationship. Mm-hmm. And then at a later date, you could invest with us. So at our website, truefreedomcapital.com/investors, you can sign up to be an investor. We'll have a chat with you. You'll get kind of the newsletter and the emails from us teaching you all about this sort of investing. And we could go from there, but that's typically how somebody would invest with us right now.
If someone listening to this wanted to go and they were a non-credited investor and they said, how much minimum could I put in to be exposed to your fund? Do you guys have like a cap? Is it like 50,000, 30,000, 10,000? Where do you guys kind of cap it?
Yeah, I think what we would cap it at is probably about 25,000.
25,000.
And that's, it all depends on the deal size. And I used to say, hey, we may go as low as 10. But really, if you're trying to raise $3 million and you can only accept 35 non-accredited investors into the deal, right? That kind of caps how much money and how many people you can get in. So I would say $25,000, and it's okay if you're not an accredited investor, right? You could be what the SEC calls a sophisticated investor. You know enough to make a sound judgment on whether or not something's a good investment.
Okay. Huh. Okay. That's cool. So what's the website again? If those listening wanted to go check it out.
TrueFreedomCapital.com.
Okay, cool. Awesome.
Yep. And I would just say we don't have like any fund right now or anything like that. So it's very, per deal. So we would raise, if you go and sign up on that investor list, then you'll get a notification that we're doing a raise. So it's nothing that you can contribute to at any point in time. There are funds out there that do that. And then they hold the money and then, can access it to go buy the properties. But that's kind of another step up from where we are right now. So
just as far as like paperwork and certification, things like that.
Yeah, and deal size is like big funds usually go after massive 300 unit apartment complexes. Right. Their yields and their returns are lower than what we're looking for as well.
Well, I'm sure you guys probably already know the steps to do that, but if not, I know they're having a hedge fund conference in Vegas in a few weeks. I don't know if you guys are interested. Looks like a lot of fun. But, well, guys, I don't want to keep you on for too much longer. We're at about 47 minutes, 48 minutes, kind of roughly the time of these podcasts. I could ask you guys questions all day, but I'm sure you guys have pretty busy lives to get to. Any last piece of advice really to I guess to anyone listening to this that maybe wants to get into investing period, commercial investing, anything like that?
You got something, Chris?
Yeah, I would just say, hey, don't try to time the market. Don't, you know, try to make a home run necessarily your first deal. Go out, get your feet wet. You don't want to buy a bad deal, that's for sure, but don't necessarily look for everything to fit in the picture perfectly. So
Mm-hmm.
better to go out and maybe make some mistakes, even lose money. I've sold at least one deal where I knowingly lost about $8 or $9,000, but it was because there was a better opportunity cost or better opportunity for that equity that I had. So you're going to make mistakes. Better to make them, on a $100,000 deal than it is to on a $10 million deal. So
Right.
go out, get your feet wet. Just don't wait.
Well, I appreciate both of you guys for coming on today. I'm sure this one will be one of our higher rated podcasts. If it is, I'd love to have you guys on again for maybe a part two and talk more about fundraising and more in depth questions about commercial real estate. Guys, those of you listening, go give Joe Firmin. It's Firmin a follow on TikTok. Right? What's your handle? Is it just Joe Firmin?
Yeah,
Cool.
at Joe Firmin on TikTok.
If you guys want to know any more information about commercial real estate. Also, if you want to know more about True Freedom Capital, just head to truefreedomcapital.com and subscribe to their free newsletter? Free newsletter. Alrighty, guys, I do really appreciate you guys taking some time out of your day to answer some beginner questions I'm sure you get asked a million times.
No, that's great.
That's fine, Jason.
Love talking about this stuff. Anytime.
Awesome,
Yes,
guys.
thank you.
Well, you guys have a fantastic rest of your night.
All right, thanks.
You
Jay.
too.
Bye, guys.
Yeah.